If you run your own business or work for yourself, so in other words, if you invoice some every month and you have to pay your own tax, the banks will typically want at least 2 years tax returns or financials. It's not that banks don't like self-employed borrowers, it's just they're a bit harder to assess. Your income isn't guaranteed like an employment contract, so they compensate by digging more into your financials. Investment income. If you have an investment property bringing in rent, dividends or shares, banks can consider that. Dividends not as much now, but it is possible. With rental income, they'll usually only count a portion of it. So they'll only use 75 to 80% of that rental income because they assume some of that rent goes towards paying agents, maintenance, vacancies, that sort of stuff. Government payments. Certain payments are accepted as income if you have kids. So for example, family tax benefits, part A and B can be counted by many lenders. If you get a pension from overseas, I've seen some people get that counted, disability pension, that sort of stuff. So it is possible, chat to broker, not all banks will accept that. Other income like child support payments, if you get scholarship income, all this sort of stuff can be considered, but it just depends on the bank.